Test. Okay. How we feeling today, guys? Welcome back to Solus Finance, where today we're going to be talking about just how to build a dividend portfolio, right? As an investor, you might be looking for a place to earn some income, earn some. I think of it like real estate. Think of it like owning a house. When you own a dividend, it's like you're getting paid to hold an asset that then pays you back, right? So keep that mindset as we go forward, and we'll get into what a dividend stock is, how dividend stock work, and why a dividend portfolio. We'll also talk about the pros and the cons of dividends, and then I'll give you metrics to actually analyze and to avoid dividend traps, which we'll get into when we get there. And then I'll also give you the full four main rules to a strong dividend portfolio. Let's jump into it. So, what is a dividend stock? A dividend stock is just a stock or a company that pays some of its earnings to shareholders. You also get paid by simply just holding the share of that company. So let's take Coke for example. You put $50 into Coke for one share. You're earning this share, and that $50 that you put into Coke is now paying you to have that piece of share. So how do dividend stocks work? Like I just told you guys, imagine you have 100 shares of a company. Okay, then this is on a bigger scale from what I just said. You pay $10 per share, and you receive 50 cents on the dollar worth of dividends per share. So if you invest $1,000, you will receive $50 a year. Now, depending on what dividends you get, you can either get paid monthly or yearly or even quarterly. And I think sometimes weekly too. Now, why a dividend portfolio is because it's regular income as investors. It's almost like owning houses in the stock market. If you want to think of it like that, it has some safety and stability behind it, and then it's balanced resistance to inflation as well as market fluctuation. So for you guys who are always out there complaining about inflation, why don't you got dividends? Like if you want to get some resistance and balance towards inflation, own some dividends, right? Just makes sense. Shit, I don't know. Now we're going to talk about the pros of dividend investing because, like everything, there's pros and cons to it. So, some of the pros of dividend investing is it's passive income. You don't have to do anything with it to generate income, right? It's just gonna passively work in the silence, work in the background, as you are right now listening to this video. You're working in the background to reduce to make passive income. It also reduces risk and volatility. There's some tax advantages as well. Dividend payments taxed at lower rates, so your paycheck, right? It comes in and it gets taxed, I don't know, 22% or something crazy like that. But these dividend payments, they're taxed differently because they're in the market and it's a dividend payment. So the tax advantage, depending on your profit, is I believe 15%. So it goes from 0%, 50%, 20%, depending on your profit range, which is a lot better than your paycheck at getting taxed at 22%. So now we'll jump into the cons because, like I said, guys, there's risk to everything that you do, and there's pros and cons to everything you do in your life. There's little growth to these companies because they're constantly paying out their shareholders, which is what we want. Dividends ETFs are not diversified, and then dividends are never gonna be guaranteed because sometimes something happens to where the company fails to mismanage money, and then now they can't pay their shareholders, so now you don't get a cut. So yeah. And then dividend companies tend to be large cap. Now, like I said, guys, I want to give you three metrics to analyzing how to avoid dividend traps, because we don't want you to jump into those companies that end up having more debt over equity, and not having enough cash flow to be able to pay out the dividends, and also the price being either overvalued or underlined just because the news is saying it's hot, right? So these are three measures to analyze, avoid dividend traps. Um, the price to earnings ratio, is it overvalued or underlined? And then if there's no cash flow coming into the company, or coming into the company, that means there's no money being that will be able to be they will be able to use to pay out their dividends. And then debt to equity. If there's more debt than um, if there more shareholders than debt, and there's more debt than shareholders, you got to the company won't be able to pay out the dividends as well, and the company could go bankrupt, which is not ideal. And then we got the four rules to a strong dividend portfolio. If you follow these four rules on when you're building your portfolio, you are guaranteed 100% success. But there's always risk to everything in life. So do what you wish. Rule number one, a dividend must be sustainable. Rule number two, growth matters more than yield. Rule number three, diversify by business. And rule number four, reinvest until you don't need to. Because eventually, guys, the goal is to have this as a source of income to while to be running in the background as passive income. So hope you guys really enjoyed this video today. Hope you guys learned about what dividends are and how they work, and why you should potentially think about adding a dividend portfolio to your stock portfolios, and then knowing the pros and cons of dividend investing, and then how to also pick the certain right companies. Because at the end of the day, guys, this is just all advice that I'm learning, that I'm trying to give to you guys to be able to hope better yourselves in the future. As always, we're aiming to be king in the mountain one day, and have a blessed day.